Hey everyone, my name's Andy. My channel is Finding Value. Hopefully you're having a great day. I got a lot of questions in the comment section about ratio analysis. How do you know when to swap? How do you buy physical precious metals? All great questions. All right, so I'll give you one example of a swap that I did, and I'm going to give you an example of when I was purchasing. So, looking at ratio analysis, I'm going to jump into this presentation here. So I call this ratio analysis. So where I'm doing my charting is on stockcharts.com. And if you look in the upper left, this is $PLAT $GOLD. This right here is how you look at a ratio. That's what the colon is there. Dollar plat is the continuous contract, same with gold. So this is the platinum to gold ratio real time. So I plotted it using stockcharts.com. Now, I bought gold back to 2011, or no, it was 2011, it fell, and it was like 2012, 2013, somewhere in that range. I bought gold because it was extremely cheap. So I had some gold, I added to my gold holdings at that time, and I've been holding it ever since. I bought palladium back in the mid-2000s because the ratio was cheap, and just by happenstance as well because it was so cheap. And I've been buying silver in 2019, and I was buying platinum late 2019. And silver was 2018, 2019. Yeah, that's what it was. So I've been buying it through that period. In mass too, like I've been going in and accumulating a lot of the stuff. So I've got this pulled up and I swapped my gold for platinum. And you asked, well, where did you swap it? I swapped it in April of 2020, right in here. It was at 0.425. And the reason I chose that was there was panic, and typically what happens is, I'll swap out here. There was panic in early 2020, just in March and April. Everyone was selling everything, and gold doesn't really fall very much. Silver and platinum, I mean, they got smoked. Just straight down, boom. Platinum, I bought platinum. It was in the 600s. Platinum was in the 600s at the bottom there. And the difficult part was, all the places like ran out of the bullion. They all ran out. Or they would limit how much you could purchase. So I bought 1 ounce at one of the online, it was wholesalecoinsdirect.com. I think that's where I bought it. And it was like $680 after the premium. I got 1 ounce because that's what they limited it to. But I bought a whole bunch and I swapped a bunch at a dealer. I went to my local dealer here in the city that I live in. And I took it in and I swapped some gold. And I swapped some palladium. I wanted to swap it for silver, but the silver premiums were absolutely berserk, and they had stuff that I didn't really want to swap into. So what I did is I swapped into platinum, and they had to order it, and it was a long wait. But I swapped it in there. They gave me $25 over spot for it, and they gave me a discount on the platinum, and it was, I think it was like $30 over spot is what it was, because the price was really low too, and not many people were buying platinum, at least through that dealer. But it was a long wait. It was like weeks and weeks, and I said, I don't care, just do it. So I got locked it in, and I had to wait some weeks to get it because they ran into shortages. But I did get it, and I did swap palladium for platinum, and I swapped gold for platinum. And silver was just the premium shot too high. I wasn't willing to pay that premium. And later on, I actually got a deal through Craigslist. Someone was selling some silver, and I said, I'll take it. What deal do you want to make? He had 400 total ounces out of 500. He already sold 100. And I bought all 400 for $17.75, and that was the spot price. He sold it to me for the spot price, and that was May or June or something. A little bit after April, I know that. It was May or June of 2020. And I said, I'll take it all. Take everything you got. That was SD Bullion Liberty Freedom coins were the coins that he had. So looking at these ratios, stockcharts.com, using that format can get you real-time charts right here. I swapped it in April because it was panic, and I saw silver and platinum absolutely crash out, and gold was holding relatively stable. So I was like, this is the time to swap in during a panic, basically, and swap my metals. Plus, the ratio was absolutely screaming buy. So I'm going to go into this ratio. It was at roughly 0.425. I was getting over 2 ounces of platinum in relationship to 1 ounce of gold. Extremely happy with that. This is a long-term platinum to gold ratio image right here. And if you look at this, I was at 0.425. It's below 0.5. Off the chart since these things started trading since 1970. I was like, this is it. I'm going in. I'm swapping it. And I swapped it. Now, just to let you know, and I'm not going to tell you tax advice or anything, but the dealer is not required to do a 1099 unless you transact per transaction more than 25 ounces of gold, 25 ounces of platinum, 100 ounces of palladium, and 1,000 ounces of silver, just to let you know. Platinum to gold ratio, it was off the chart. It was panic time, blood in the street. Everybody's panicking. I'm like, lock it in, get me in here. So I started buying in mass. I loaded up on silver from that guy. I bought and I swapped to platinum, and I was buying platinum too. Looking down, platinum to palladium ratio. This was another one that I swapped. This is the real chart here. See this double bottom? That's a double bottom. I did it at 0.35 as it came back up. 0.35 on this chart is off the chart. It's way down here. Total stinking deal. Total deal. I would be a nutbag to not do it. Plus, platinum is a substitute for palladium, and I was like, at some point, they're just going to substitute platinum for palladium. Why not just swap it and hold it now? Which I did. Plus, the premiums were really low, and the price of platinum was really low. So not only could I swap and do all this, I paid very little of premium over. So it was the perfect time to do it. Plus, I was buying like mad in platinum because it was so cheap. And silver if it was available. I mean, it was tough to get. So that was the reason why I swapped it, and that is where I swapped it, because it was below all of these ratio points in history. Now, this is the double bottom here. You also had palladium to silver ratio do a double top. At 160, it hit that before, even on the averages before. And I saw this, and since I know the history of I did a palladium to silver ratio, I know what it looked like. It topped at 160 before. I'm like, this is the time. Let me go try to get some silver. Silver wasn't really available, and they marked the premiums way higher. So this 160 really never existed. It existed on paper contracts, but never existed in real life. Platinum was a better deal. I didn't have nearly as much platinum at the time. I said, all right, let's do platinum, deal. They paid me, I think, they gave me the ask, so there's an ask and a bid price on platinum, and sometimes that spread is very large. They gave me the ask price on palladium, sorry. The ask price on palladium, and I purchased a little bit over platinum. I think it was like 30 bucks over spot. So that's my experience. I did it through a dealer, and that's how I handled it. I used this analysis right here to show you how I did it. Right now, looking at the charts, this is the palladium to silver. Silver is still extremely cheap, and platinum to gold, platinum is still a bargain and a half. So what I would be doing is, if you like silver or platinum, I would be buying those two metals, because on a historical basis, given the ratios, those are extremely cheap. They also go berserk during commodity boom periods. So how do I know when to swap? I know history. I know these ratios inside and out. This is one of the strategies that I incorporate into my investing. And if you're going to incorporate a strategy, you better know it inside and out. You gotta either create the charts yourself, which I did. Those charts that you saw in my video, I created all those charts. I looked online, found the data, and created them in Excel. These are just how you do it real time very quickly. Stockcharts.com. You can type into Google Images. You could type platinum to palladium ratio and then look at images, and you'll see historical data on ratios. This is where I got these charts right here. This was from an article. So that's how I figure this stuff out, and I incorporate this in a large portion of my strategy of investments. It's a third. I'm trying to get to 1/3 of my entire net wealth using this strategy because it's such a low risk strategy and it's kind of off the grid. The other 1/3 is real estate, and the other 1/3 is going to be stocks. And I don't speculate with a lot of my money, because if I have a low risk option that I can do this with, I'm going to hit that button. I'm going to hit that button so hard, because it's literally it's not riskless, but it's less risk than cash. If you look at Exner's pyramid and you look at the debts, cash is debt. You want to be holding debt? I don't. I want the stuff. I want the good stuff. I want real money. I want other metals that are used for industrial purposes. And if you look at the supply and demand balances out in the future of platinum and silver, it's absolutely ridiculous in terms of renewables. They're going to want to use these things more than what there is available. They want all of it. So that's a good spot to be hiding out in. And if the ratios are cheap alongside of the market balances out in the future all being in deficits, I mean, this is no brainer. You just buy it. You buy it and you hold on. That's how I view it. You guys can do what you want. This is not financial advice by any means. This is a financial education channel. I'm just letting you know what I'm doing and my viewpoints. Now, I'm going to tack on another topic here. A lot of people are asking me, what should I do with uranium companies? Should I swap out and go into oil? Should I swap oil and go to this? Guys, develop a strategy. Stick to the strategy. Don't be chasing prices. This is what gets you into trouble. That's a rookie move. We are better than this. I want you to develop a strategy, and I want you to say, this is how much I want to put towards oil. This is how much I want to put towards uranium. This is how much I want to put towards silver mining companies. That's what I'm in. This is how much I want in base metals and whatever else. Stick to the plan, buy and hold, and go after a certain portion that you want to go after. If you want max leverage, uranium and oil and natural gas are the spots to be. Don't chase prices. Find your entry points, buy them, and hold on. Don't be swapping in and out. The ratios are too cheap to be doing that with. You're worrying about little 30% pullbacks. Don't worry about it. You gotta ride it through. Buy it and hold it, because these things are very cheap. Very, 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 very cheap. Once in a lifetime cheap. All right? Develop a strategy. My strategy, and I just told you what my portfolio looks like. 1/3 real estate, 1/3 physical metals, and 1/3 of stocks. Now, in that third, it's probably 15% is available to do this, the riskier stuff. And of that 15%, I'm putting in some into natural gas and oil, some into uranium, some into silver miners. I've got royalty companies in that mix. And then I've got other companies that I think might do well, like Open Door, like some of the base metal companies, the diversified miners. I own a lot of those. So develop a strategy, find your entry point, stick to it. The valuations are too cheap. And when do you sell? You sell when the valuations get expensive. That's a ways away. Now, I want something to be crystal clear here. If these things move, they could move fast and they could snap back. I don't want you to be sitting here joggling it around. You got to find your companies. You got to do the research now. Find what you like and stick with it and cost average in. Get your shares. Hold on to these things. I bought SM Energy at $1.50. I put it on this channel so everyone had that opportunity to do it. I'm still holding on, and I'm not going to sell it. The valuations are at mid-30s up of oil to gas ratio. That is cheap as hell. This is not the time to sell. This is the time to accumulate. Would I buy SM Energy? Yes. I would still buy it. That's why I still hold it. And I'm going to wait until those valuations get way up there. I think SM Energy, I know this is crazy. Everyone's calling me crazy for my calls. I think SM Energy could potentially be a $200 stock. And I bought it at $1.50. Why do I think that? Because there's things that are developing on the inflation front. Everyone's pricing this supply-demand. You're looking at supply-demand. Think of inflation. Think of oil gaining $100 to $200 a barrel off of inflation only. Then think of the supply-demand on top of it, of that ratio compressing. We could see oil and gold, we could see gold and silver get repriced very quickly, depending on how this thing snaps back. If you're noticing, look at some of those charts that have broken monster patterns. VALE. Look at all these companies. Some of them, like Southern Copper, it's going vertical. Vertical when it breaks. There's a potential here where this goes vertical. Michael Oliver was talking about chaos theory, and he thinks that this thing's going to snap back. He's looking at the momentum and how much momentum these things have and the potential that they could snap and go and move to the upside. This isn't the market to be swapping in and out of. It's a market to get your shares and hold on. Hold on for dear life and just get ready. What we're doing is we are smart investors. We are positioning for the move. This is a chess game. Some of the pieces may not be working at that time. We may lose a piece or two. It's the position that you're gaining. It's a strategy. It's how do we position this to get in checkmate positions. This isn't go chase prices all over the place. This is get your shares, figure out a strategy, and lock it and load and be ready for it. I've been buying silver mining companies because I think silver has an incredible opportunity ahead of us. I have uranium companies. You've seen my videos on them. You know the ones I like. I've got oil and gas. I've been putting charts in front of you. Grand Tierra Energy, SM Energy, which QEP, which is now FANG, Centennial Development, Contango Oil and Gas. I got a whole bunch. SWN Energy, Antero Resources, Crew Energy, Birchcliff, AAVVF. I own all of those. I'm diversified out. It's like I'm ready to go. Oh, I bought RECO, Reconnaissance, RECAF. Someone recommended that right before that chart break. I'm like, I'm in. So I'm diversifying out. I'm getting some explorers. I've got some producers. I'm going for it with my speculative money. But remember, I have a lot of money that's in physical precious metals. So if you guys are chasing price, you're doing it wrong. Chase value. Value is the ratios. That's where you load up. I've been buying platinum for over a year. I've been buying silver for a couple years. I'm buying it when it's cheap and I'm cost averaging in. It may take over a year or two for some of these to really take off. And some of them have taken off. It's about positioning. It's not about quick money. It's not that. This is big money I'm going after. I'm not going after the 100% gain. I'm going after the 1,000 bagger. I'm going after the 100 bagger. I'm going after the big money. And this is how you make big money. You don't chase around. You don't look like a chicken with its head cut off chasing all this stuff. You want to be locked in, you want to have a strategy, and you want to accumulate. That's what billionaires do. I don't see John Goff selling his Contango oil and gas shares. He's buying more, cost averaging in, but getting assets into the company. So the strategy is set it, figure out what you want, find your companies, do the research now, accumulate, and then hold on. If you guys like this content, subscribe, click the thumbs up button. Appreciate it. This is Finding Value.